Good morning. Good morning, Cindy.
Good morning, Sean. How are you?
I'm good for a Monday.
I know. Quite a catch this weekend. I saw that.
Yeah, that was fun. We caught a bunch of those up at Silver
Really?
Creek in Cholo. Yeah, there's some, you like fishing, it's a really great place to go. It's
Is
not,
it catch and release or?
yeah, catch and release.
Ah.
And it was a lot of fun. And it's a good getaway, a good way of just decompressing. How's your weekend?
Good. Very good. The agents were busy. So that's good.
That's fantastic.
I got to take this real quick, so I'll check back.
Go ahead. Good morning.
Good morning, Sean.
How are you?
Good, how are you?
Good. I haven't had my coffee yet, so I'm working on that. So I'm still a little tired.
Did you have a spring break?
Well, not really. I took a couple days off myself. I went fly fishing up on the rim.
Oh, I saw that.
Yeah, on
Good for you.
Thursday and Friday, which it was a well-needed break.
Good. Good
I
for
don't know
you.
what I needed to get away from my 3 teenagers mostly, or just getting a break from work, but it was a good combination, that's for sure.
Awesome. Good.
Yeah.
Morning.
Good morning.
How are you?
Good.
Good morning, everyone. I have headphones, but I'm not sure they're going to work.
Good morning.
I really like these Bluetooth headphones with a computer. It's been fun. These little AirPods have been magic.
Do the AirPods, are they coming?
Hi, Jenny. How are
Oh, good. How are you?
You know, they connect to
Good.
your laptop. You just have to set it up with the Bluetooth within your laptop.
Okay, because I have a Mac, so I use them all the time with my Mac. I just didn't know if they were compatible with like a Dell.
I didn't think they
They
were, but
are.
we figured it out.
That's awesome. That's
Yeah.
good to know.
I don't think they're compatible with yours, though, Ange.
No, they've got to be compatible.
I'm using a set of Angie's, so I'm like, okay, these aren't working really well.
All right, so we're going to get started in just a few more minutes. So if people keep trickling in. So yeah, there's some interesting changes that are happening in the mortgage industry, but they're not too significant. At least They sound like they might be, but they aren't. So we'll go over those in just a second. I'm going to share my screen to get started. All right, so I'll give it 1 or 2 more minutes just to get the stragglers jumping on. So I appreciate your patience. All right, guys. Well, welcome to the Monday morning Mortgage Minute. And I'm Sean Wolin, Sunwest Mortgage, and I'm going to be going over just a little bit of what rates are doing and what to expect so that we can really set our customers and our buyers up for to set their expectations properly and to get in front of this and just be a beacon of information for our customers. And they can always look to us to have the most cutting edge what's happening out there. So first off, let's look at what the markets are doing real fast in the bond markets. And that is exactly what controls interest rates. So if bonds do well, interest rates do well. If bonds do poorly, rates do poorly. And here is a breakdown. Here's the water slide, so to speak, the waterfall that we've seen in the bond market for the last 2 or 3 months. Since January, we hit a peak, and then we've been oscillating and then coming all the way back down to where we are today. So the average interest rate today is 3.44 on a standard 30-year fixed.
3.44?
3.44 is the average across the nation now for a standard 30-year fixed. Now you can buy points, you can get those lower, but that's the average. And where I get that average is from a really good website that I use to help my customers understand what's happening in the marketplace. And it's called mortgagenewsdaily.com. So if you go to Mortgage News Daily, which is this website right here, you can see kind of what now it's 3.45. So the average for the nation on a 30-year is 3.45, on a 15, 2.89. And so this is a really good average of what markets are doing. Plus, there's a lot of really good articles. Like here's one from Fannie Mae, home sales will weather the rising rate environment. Talks about how the amount of buyers that are out there right now are very strong buyers, and it's not going to be, there's not going to be any adverse effects on the higher rates on these buyers. Now, the first-time home buyer, that's another one altogether, because it will limit the amount that they can buy. Keep in mind that about 1% in interest, 1% in interest rate increase is about $50,000 in buyer ability as far as what they can purchase. So if rates just choose to go up by 1%, that limits what they can buy by about 50 grand. So this is what rates are doing. Now, one thing I want to point out is we bounced off this floor. This was Friday, and then this is today. We're gaining some traction. What I believe will happen is I think the 10-year will hit 1.60. So I think we have a couple days here where we're going to see rates get a little bit better, but then they're going to bounce back and follow their trajectory lower. And unfortunately, rates, I believe, will end up in the 3.75 range pretty soon. At least I know, at least by summer, they'll probably get there. And it's just because of inflation, nothing more than just that. So that's the unfortunate piece about it, but it's a reality we all have to live with. And we have to set ourselves apart to make sure our buyers understand that if they're waiting, it will cost them money. It absolutely will cost that money. Don't forget those bid over ask reports and the cost of waiting reports that I can run for you, just to help with some basic information to show in real numbers what it would look like if they waited to purchase versus what it would look like if they just bought right now. Now it is challenging out there. So one of the things I wanted to discuss with you guys today and have just an open conversation is I've compiled what I think is a good list.
No, I forgot. So I parked in front of the street because I was already.
What we're looking for as far as how to make the offers as strong as possible. So I put together a little list, and I'm going to go over that with you. Now I've seen a lot of things out there, but at first, so here's 12 ways to have the strongest offer. Now, if there's more than that, I want to open that up because I want our agents that we work with to have the cutting edge, whatever we're doing most to help these people get these offers accepted. So the very first one that I've seen work really well is offer a rent back to the seller at no cost. Now, unfortunately, the tragic thing about all of this is it's expensive. Every single one of these pieces has to do with either giving something back to the seller, but unfortunately, that's the world we live in. So offer a rent back to the seller at no cost. Now, your buyers right now, or your sellers are afraid. They're afraid if they sell their house, they're not going to have a place to go. Well, as part of the selling listing presentation, you can say part of the things we can negotiate with the buyer is to let them stay in your house for a certain amount of time to find a home of your own. So that's what you can, as a buyer, offer to your seller to stay in the home at no cost for 60 days, whatever it may be. The next one is offer to cover the seller's closing costs. I've seen this quite a bit. I've seen where people are saying offer up to $1,500 in seller closing costs. I mean, because you want to keep a limit on it, you can. Obviously, bidding over the ask, I say duh, because I think every offer out there right now is over ask or at ask with a lot of other stipulations. But bidding over ask, it's definitely a way. And don't forget about our bid over ask tool, which will show you how much you need to go over and how much time it'll take to recoup that cost of going over above ask. We have seen close on time guarantees. So because we pre-approve everyone through underwriting up front, we can offer these guarantees. Now, if the property is off grid or it's more of a unique property and there may be a challenge with the appraisal, you may want to, avoid this guarantee. But what we're seeing is close on time guarantee. If we don't close on time, there'll be a per diem charge to the buyers for every day it's passed. So again, some of these can be a little risky, but it's kind of risk reward in this market. So keep that in mind. One of the easiest things we can do is the lender to call and email from me to go over the strengths of the buyer with the seller's agent. I think that's absolutely critical. If we're not doing it, that's a disservice. So that's something that we're doing on every offer. A lot of times the sellers are not answering. So we'll shoot a text, we'll shoot an email. We'll try to get in front of them as much as we possibly can. That is very instrumental just to make sure we're having that conversation. And the selling agent will tell me a lot. It's a much different conversation when they talk to the lender versus when they talk to the buyer's agent. So I'll pull out some information that may not have been disclosed before. So keep that in mind. We'll have that conversation with you as well. The buyer's love letter, we all know what that is. I love your home. Here's my family. We've got 3 kids. We've got turtles, the whole 9 yards. Make sure you strike a chord with the seller. It's hard. As a seller, it's hard. You see all the offers, it's very difficult to choose. And then another one, use the seller's preferred title company. It's just another way. It stinks because then you might not use the one you preferred. I mean, I love Pioneer Title. I use them for everything I have, but sometimes you have to take it on the chin to get the offer accepted, and that's one way of doing it. Now, the next one is waiving inspections or the inspection periods on your offer. Now, if it's an older home, this is kind of scary. But if it's a newer home that's really well taken care of, and you're going to be buying a home warranty, you may want to consider that. Again, anything we can do to get the home. Waiving appraisal contingencies, that's always a risk. Your buyer has to have money. When we're doing this, make sure that you're providing proof of funds to the seller to show that you can do this, because I've seen people, sellers, look at these offers that have waiving appraisal contingencies, and they're taking the ones that have supplied the evidence that they have the assets to bridge the gap. So make sure you're doing that as well. Now, don't forget, we have a very unique software at our company that allows us to run these loans through an automated underwriting engine with the address prior to making an offer. Typically, what that would do would trigger the disclosures and a live file. And then after we do that, if we don't get the property, the lender would have to cancel the file, redo it, and disclosures go out. It's a nightmare. With us, we have a system where we can run it, get an appraisal waiver, and then back it out and delete the property from the system before disclosures go out. What that does is it allows you to go make an offer up to, let's just say the listing price was 630, you wanted to make 640. Well, we can run it as high as we need to, up to 660, or sometimes it goes higher, and it accepts it with an appraisal waiver. That way you can go in with confidence knowing it's only 20% down of the purchase price that I'll need, and we don't need an appraisal at all. It's not an appraisal contingency that says, regardless of what it appraises, we're still going to buy the home. This is a complete waiver. So that's a very good tool. So make sure that if you're making an offer and they're putting 20% down or more, that's key. They have to put 20% down or more. Then you can get those appraisal waivers.
We gotta turn
Yep.
this off.
Did I have somebody have a question? Sorry.
Sorry about that, Sean. I wasn't muted. I'm sorry about that.
No, that's okay, Mike. Not a problem at all. I just don't want to miss anything. And then the next one is a very large earnest money. I've seen people with 10% down put the whole 10% down as earnest money. I mean, I've seen very aggressive earnest money strategies, and I've seen some of their they're just scary. Some of them making them non-refundable after the inspection period is always something you can do. Again, if you have the loan fully approved up front and the only issue is the inspections and you have an appraisal waiver, waiving or having the earnest money be non-refundable isn't too scary because you've already done everything. Again, it's just a strategy. Some of these are pretty scary. Now the next one is our true approved certificate. That is a certificate that your buyer will get, you'll get it, that says the loan has already been approved through underwriting. The only conditions on this are final verification of employment to make sure they still have a job, satisfactory title, and satisfactory appraisal if it's needed. So it's basically a cash deal if you're waiving the appraisal. It's the same as cash because the loan's already satisfied. Loan's already approved through underwriting. We just need a few small things. Sometimes using the seller's inspectors helps. I've seen it. I don't know how really much that would help, but I have seen it. Don't ask for them to pay for a home warranty. That could be something that they just don't want to provide, so they'll just skip over you. Now, the last one is the most important one, I think, and it's where a lot of us fall short. Just ask the sellers what they want. And it might sound simple, but I've had people make offers and they kick themselves because they accepted somebody else's offer because that person was willing to have a very long close of escrow of 90 days. And they didn't know that. So just asking the sellers, listen, I'm making an offer. Are there any unique needs that your seller has that I can help satisfy or meet through our offer? If you're not asking this, you may be missing out on something really simple and stupid that's keeping you guys from getting your offer accepted. Timing, rent back, all of these things can come in this circumstance. So these are the 15 things that I've seen that are really making it effective when making offers. I've seen some things that are quite frankly, they're dangerous, but they have worked. I don't recommend them, but I have seen them. So I will, again, take this with a grain of salt. But I have seen people that had a home that was contingent, that was already under contract. I've had them go in non-contingent, just hoping and praying that the sale went through. Scary, but I've seen it happen. Guys, people are doing some scary things. And that's why I want to make sure you guys know, if you have listings and you want me to go ahead and call the borrower just to get a quick feel for what is happening behind the scenes, to get a sense of, it's not a true pre-qualification through me, but have me do a call to the buyer that is making an offer on your home just to make sure that their property is vetted.
Yeah, you've called me twice.
I can jump through here and I can jump into their scenario and know exactly the red flags just by asking them 5 or 6 questions. So if you're trying to decide on an offer, let me reach out or have the buyer reach out to me. I'm not going to run credit. I'm just going to ask them 5 or 6 questions to kind of bring out what the red flags may be that could keep your transaction from closing. But there's a lot of methods we can do. Do any of you have any other items on here that maybe I haven't put in here that can help? Don't be shy. So there's a chat here. Can you explain the appraisal waiver again that your company has? Yes. So waiving the contingency is one thing. That just means whatever the appraise is for, it doesn't matter. You're still going to buy it. So if the appraisal comes in $30,000 lower, you're still going to buy it. Appraisal waiver is something that Fannie Mae issues if the borrower is strong enough and if they think that property is within a algorithm of what they think it's worth, and you're putting 20% down. Most of the time, this comes up after you make the offer, after the property's put in there, after disclosures are made, then we'll run it through our automated underwriting system through Fannie Mae and Freddie Mac. And that's usually when we get it. And then we send you a surprise saying, hey, guess what? We don't need an appraisal. And then you're really excited. What we're doing up front is before you make the offer, we're running that through the system to see if we can get the appraisal waiver then. Appraisal waiver means you don't need an appraisal at all. It's not even ordered. It'll save your customers $400 or more. And it's just a way to help you go in with confidence into that offer because you don't need it at all. So the way it works is we put that price already in the system. Let's just say list price was $610, but we're going at $650. I put in the system that you're buying it at $650. And if the system allows that and says, yep, we accept that value, we don't need the appraisal. So that's what the appraisal waiver is. We do that before you make the offer. All right, why is FHA lower than conventional? Oh, that's on the rates. Good question. FHA rates have always been about a quarter lower than conventional loans. It's just a different bond. It's a government-owned bond. It's not sold. It's not a conventional. It's just different. So it's always been that way. Ask why. I think it's just because the government wants it to be lower for first-time home buyers to have a little bit more of an edge when getting in with an FHA loan. All right, so I did go over quite a bit today. Do you guys have any questions on what's going on in the market? Oh, one thing, lucky number 13, offer to give seller back 5 to 1% of your commission. Ah, there you go. If you want to make less, that's definitely a way of doing it. Lowering the commission, more money in their pocket, guys, means the bigger advantage you're going to have on getting that offer accepted. But I wanted to get back to you. I've seen a number of different lenders change their rates now on second homes and investment properties. So keep in mind that Fannie Mae and Freddie Mac are exiting that market, and it will be replaced by more of a traditional banking type portfolio product in the future. So rates are changing at different lenders on second homes and investment properties. If you see something that's different on your buyers as far as rates, let them do a rate comparison with us because we haven't changed our rates yet. But we are seeing lenders change across the board in anticipation of these changes in the near future because they just don't want the loan. So they're raising their rates up higher to kind of push them away. So if you see that, let me know. And I'll be happy to do in your rate comparison. All right, any other questions for me? Buyer commissions are already dropping so low that I don't like seeing that. I know it's frustrating. I know it's tough out there, guys. It is really tough. But use your lender. It's not me. Use whoever you use to really become an ally. And it's a lot of work on sellers to weed through all these offers as well. So on both sides, it's been difficult. But I believe we're going to see this market for the next 6 to 8 months before it kind of slows down. And I think all these people that are relocating and learning that they can work remotely permanently and moving to places that are, for whatever reason, once everyone puts their roots back down, I think we're going to see the first-time home buyers come back in at that point. And then we're going to see the second wave. Second wave is going to be a little bit more, it's going to be a little bit different, I think, because I don't think it'll be as much, it won't be as rich as far as how much money people have down, because that market right now, I think, well, it might last longer, it might last a year or two, who knows? But I think the poor first-time home buyer, I just feel so bad for them. It's just tough. If you don't have more money to put down than what you can, the list price, you're just put on the sidelines. So feel bad for them. So if you have first-time home buyers, make sure they know it's not you, the agent, because I've seen buyers fire their agents because they think their agent is the one that is the problem. make sure you're educating them on how to buy homes in this market. Make sure you're showing them, okay, we didn't get this, here's why, here's what they accepted. There's no way we can compete with this. There's nothing I can do as your realtor to change that. So just make sure you're communicating, because I have seen people try to go to different agents to try to get a different result in this market. And you can't. I mean, if you're a first-time home buyer, FHA, and you need sellers concessions, it's just not going to work. So make sure that expectations are set properly there, because it can be very, very difficult for that first-time home buyer. All right, any other questions? We're right at 20 minutes, so I want to keep these short. Don't be shy. I'm having agents say the seller does not want to disclose the offer they accepted. That is true. But a lot of times they will, if you ask, like, how high over did they go? Or you can just watch to see when it closes, which is a pain, because that means it's been a long time since you made that offer and you're still working with them. But if you say, how far off were we, or why, can you explain why my offer wasn't accepted? A lot of times they're nice enough to at least let you know. But again, sellers agents, listing agents, you're busy too. You don't have time to really do that all the time, but it's worth the ask. All right, so don't forget our bid over ask tool. That'll show them how long it'll take to recoup, based on appreciation in this market, the higher price that they're making these offers on. And guys, sometimes they're crazy. We had one at 400,000. They went 70,000 over asking to get the property. That's wild. It's wild. We're seeing some pretty wild stuff out there. So just keep your head held high. Know that I'm here to help any way I can. And again, expectations are everything with your buyers. When I'm working with them, I'm making sure they expect rates are going to rise, what it could look like for payments, to make sure they're okay. If in 2 months the rate's at 3.75, they're still okay with that payment, because some people won't be. And we just need to educate people properly. So if you need anything, I am always available. So feel free to drop a line in, send a text, send an email. And if there's no further questions, then I'll stay on for a little bit, just in case you guys have some.
Sean, I also want
Yeah.
to just thank Angie and Jenny with Pioneer Title. They actually jump on these calls too and invite people to these calls. So I just wanted to kind of shout out to them for being a part of these Monday morning calls. Thanks, girls.
Yes, Pioneer Title rocks. Thank you, gals, for everything. I've known Angie for, gosh, I think 21 years. So she's amazing. So definitely, if you need a title company, give Pioneer a try, because they are awesome. They are really awesome. Any other questions? Okay, 125,000 over list price. Wow. Can I ask Mike what the actual asking price was?
The list was $1,625,000.
Got it. So we're still under 10% there.
Yeah.
But that's
Then
still a
another-
lot.
Then another one in Ahwatukee was 125, and it was 132.
Yeah. I mean, guys, it's crazy. It's crazy.
Insane.
And sometimes just asking, what do I need to be at to be competitive? I mean, sometimes they slip and they'll tell you. It doesn't hurt to ask. Our buyers completely all depleting all of their savings, 401k, rainy day fund. Yeah. I haven't seen too much of this. Believe it or not, there's a lot of money in the markets right now. What I am seeing is that people that are doing 20% down will set up their offers to be 10% down. So they have that extra cash to go in above appraised value if they need that. And then we're explaining to the sellers that, listen, they were going to do 20% down, but they're doing 10% down. So they have that, free up that money to go above the appraised value to make this work, to get this house. So that is one of the methods that people are doing. And then there's a lot of different ways around mortgage insurance. If you have buyers that are looking to do that, by doing a first and a second, by doing lender paid mortgage insurance. So there are some options there as well. But yeah, it's scary when people putting all their money in to buy a home, because that rainy day fund, we all need that Dave Ramsey rainy day fund. All right, if any of you guys need any like real estate report cards of what's happening in your market and this for the zip codes, let me know that as well. If you need to know those bid over ask, let me know there. And I'm just here for you guys. So whatever you need, let me know. I'll stay on if you have any further questions. But you guys are free to go and take on the market.
Thanks, Sean.
Thanks,
for
Sean.
joining us.
You're very
Appreciate
welcome.
it.
Yeah, you're welcome, guys.
Thank you.
Enjoy your day and we'll be in touch. Yeah, we recorded this, so we'll send that to everybody. And then Eric, I'll send you my card right now.
Sean, I think it's the last one that gets off can record, so I'll just wait to get off last so I can record it and then put it on.
Perfect. That works. All right, business card. All right, thanks, Sean. Contact info. I'll send that to you guys. Send new. All right.
All right, Sean, if you go ahead and get off, I think I'll be the one that can record it.
Yep, I'm gonna hop off. So you go ahead and record that, and then
right.
let's see if I've got everything.
If anyone reaches out with any of the reports or anything, just send them over. I'll be in this afternoon because I have to put stuff together for Wednesday.
Okay.
So I'll see you a little bit later.
You got it.
All right, thank you.
All right, see you.
Hi, Heidi. Bye, Heidi.